Have a listen to this. Have a listen to this.
Interest rates are higher. I know people don't like that, but you should be welcoming the stronger economy.
Maybe a deal has a point about the machinery of capitalism being oiled with the blood of the worker.
The United States is a country that has always paid all of its bills.
Lannister always pays his debts.
Don't let the bastards get you.
Hello and welcome to Comedian versus Economist. My name's Adam and we're joined as always by my little older brother and real-life economist, Thomas. Hi, Thomas.
Yeah, g'day, Adam. How are we going?
I'm doing very well, thank you. How are you?
Yeah, pretty good. Bit of a toothache, but yeah, won't let it slow me down.
That's what our forefathers said. Carrying on the tradition of just powering on in the face of adversity. Massive show coming up today. Lots to get through, so let's crack on. As a lot of people would know, I run Track My Brown, CBA running Track My Income. We'll see what they're up to, see if it's just as interesting. And what's pushing up Chinese stock prices? Great Wall Street bets, Reddit. What I did there, Thomas? Great Wall Street bets. And threats to local election officials in the US are on the up, worryingly. I don't know why people get so angry. House prices, though, Thomas, we're going to take a look at house prices first. And is the median house price in Australia still hovering around giving up your firstborn and sacrificing 3 of your finest cows? Is that still where we're at in terms of house prices?
It is, yeah, pushing towards 4 cows in the latest monthly.
And the goat.
Yeah, no, up 0.5% in the month. So still chugging along, much stronger than expected. The sort of the puzzle was that with the barrage of rate hikes that we had, like that has to impact borrowing capacity. That normally impacts prices. It just hasn't yet. So that's been a bit of a puzzle. And the property markets has gone from strength to strength. But we are seeing patches of weakness. So Hobart and Melbourne are now falling on a monthly basis.
Oh, yeah.
And Sydney's...
Adelaide, Thomas?
Oh, just Adelaide, tonking along.
On a tear. Hey,
on a tear,
just keep it down if you wouldn't mind, though. We don't want people flooding here. We enjoy our little space here.
No, yeah, crushing it. But Sydney's bumping along the bottom. And Sydney and Melbourne, you know, like I think it's like over half of the median is just in those two capitals. So that they have a big impact on the totals. But right. Perth, Adelaide, Brisbane, yeah, still tonking along.
Crushing it.
Yeah.
So what does that mean then? Does that mean higher rates for longer? I sound like an economist.
Yeah, look at you go.
Higher for longer.
Regurgitating cliches. Yeah.
Stick that like soundbite on the AFR website. Adam from Comedian versus Economist warns higher for longer.
Yeah. Yeah. I mean, it has a marginal impact through the wealth effect. So higher house prices tend to encourage people to consume more, which revs the economy along a bit, but not a massive way. I mean, it's interesting now. Sydney's getting close to falling, and it's sort of like what I'm wondering, I guess, is if the rate hikes are just hitting us with an unusually long lag, and that maybe we had like that war chest of savings didn't slow people down, and they tilted that into deposits, and that kept prices high. But now that war chest is run down, which is what the data seems to suggest, that maybe now we're starting to see the housing market cool a bit. But you're not seeing it in Perth, Adelaide, or Brisbane.
Must have been some sort of war chest, though. Like, can people have just keeping enough to buy a house on the side? Yeah, I get there's a house deposits and stuff, but yeah, wow.
I don't know. But so, I mean, the numbers, I've got another table here we're sharing to the charts on CVE's page on the Equity Mates website.
At CVE Podcast on Instagram and Facebook and equitymates.com/CVE.
Connect to the internet first.
Connect to the internet.
You find it. But there's a table there. It always looks at the change from the onset of the COVID to September. So Brisbane's up 66%. Perth's up 75%. Do you know what Adelaide's up?
Nope.
69%.
Yeah, it is.
Yeah.
I just wanted to hear you say it. Well, I got the chart right here. Nice.
Like a 75% in Perth in a couple of years is just insane. And Perth and Adelaide and Brisbane, I think maybe not Adelaide, but Perth and Brisbane definitely more expensive. The median is more expensive than Melbourne now. So Melbourne's like, gone way off the boil. Melbourne's only up up 10%. Is only up 10% from pre-COVID, so not very much. Now it's off 5% off its peak. Hobart is also 12% off its peak. So Hobart got a bit of a boom. Everyone wanted to move to Hobart, but that's coming off the boil now.
Yeah, Hobart is lovely. We went there for our 10-year wedding anniversary.
But it's no Adelaide.
It's no Adelaide. With our 69 dinner for two. All right, Thomas, CBA have got an income tracker, which is just as exciting as it sounds. So what does the income tracker tell us?
It is a little bit exciting because this is data that we didn't have 5 years ago. This is kind of new. So CBA does release sometimes to the public its internal data, so through its accounts. And it can track income coming in and it can track spending going out, and it publishes those at an aggregate level.
I would think that's a fundamental capability of a bank. Or is this is not like an AI development, like where we've made some radical progress in the banking sector thanks to AI. We can now track money coming in and money going out.
Yeah. Smart accounts. But what's interesting in the chart is the income's been on the way down since the start of the year, which makes sense with the softening economy. But then got a big pickup in July with the new financial year and the tax cuts that came in. So that saw a big bump in income.
Right.
But then what happened was that you didn't see that increase in spending. So spending sort of tracking along as per normal. And what that seems to suggest, what CBA is saying, is that everyone just took the tax cuts and pocketed it, and just went, okay, we're just saving all of that. We're not going out and spending more.
Wasn't that the point of the tax cuts though? Was that the cost of living crisis? Everyone was struggling with bills and stuff. Why didn't we pay bills with it? Are we now all in arrears? Seemed to be the point.
Yeah. No, I don't know.
Or did we misread the cost of living crisis? Are people not struggling as much as? And some people will be listening to this going, absolutely struggling. Totally sympathise with that. But across the board, at a sort of economic level, was the cost of living crisis overblown?
No, I definitely don't think so. I think it's more that just nothing changed on the spending side on the 1st of July.
Right.
Everything was
the day we got it.
Yeah.
Okay.
Yeah. So everyone, like all the spending on electricity bills and groceries, all that sort of baked in already.
Right.
And then you got a lift to the income side, but people didn't go out and spend that. They just went like, okay, we're just going to keep paying our bills and maybe put some of it aside.
Right.
So, yeah. It's kind of interesting because there was a little bit of a concern, given that so much public spending is sort of driving the economy at the moment, the RBA might look at the tax cuts coming in and go like, okay, maybe this is going to juice things up a bit and we need to keep rates higher for longer.
There we go.
As Adam said.
Adam from CBE.
Yeah. But no, it doesn't look like it. People are just saving it. Being like,
they're probably just filling up their depleted war chests. They saw it as a chance to top up. With what was it? $263 or whatever. What was the cuts?
I don't know. It depends on your income, isn't it?
Probably. Yeah. I didn't get much.
Thanks for nothing, Albo.
He's like, well, as soon as you start producing, we'll start cutting. All right, let's take a break here, grab a word from this week's sponsor, and we'll be right back after this with more Comedian versus Economist. Welcome back here on Comedian versus Economist. Don't forget you can send us an email, cve@equitymates.com, or find us on Facebook and Instagram at CVE Podcast, where you'll also find all of the charts and data that we're talking about on the show today. Thomas, Chinese stock prices. We talked a little bit about China last week and their massive stimuli. The stock prices reacted to the news. What's going on?
Yeah, well, surprisingly, they interpreted the intention for the government to just buy stocks as a positive for stock prices. As you know, as we flagged, as CV famously flagged, it was going to be good for stock prices, and they're up.
Yeah,
they're up about 18%. Yeah,
18%.
Yeah. Hang Seng's up about 18%.
Wow.
On that, so they caught a rocket. I mean, that's as we talk now, but yeah. But like it kind of like not surprising really. Like when the government says we're going to backstop the stock market, everyone's like, that's great.
Green light. Shut up and take my money. Is this just inflationary though? Like,
China wouldn't mind some inflation, I think.
Oh, okay. They've been lagging. I can't say lagging with a straight face. Lagging is just such a fun word.
Right. Yeah. No, the Chinese economy is struggling. Like, on the whole, doing it a bit tough, particularly in the property market. Like, property development's been a big driver of the Chinese economy for most of this millennium.
Right.
But that's really hitting the skids at the moment.
Okay. Is this the equivalent also of printing money? So when COVID hit and the government just started printing money and just injected a ton of money into the economy, and everyone was like, "Oh, that's going to be inflationary." And there's what was it? Modern monetary policy. Advocates
modern monetary
were like,
theory.
That's the one.
Yeah.
They're all like, "Yeah, this is great." Is this the same thing?
Yeah. I don't know. They're doing it through money printing as much as they are. Yeah.
Government coffers, the government war chest.
Yeah. I'm not sure. I mean, they probably are printing some of it. I don't know. Actually, I've never seen a chart on Chinese money supply. I think they keep that one a bit close to their chest. Close to their war chest. Yeah.
Right.
Yeah, so I'm not sure, but some of it probably is. But yeah, it's stimulus. I mean, as you're saying, like they reduce the reserve ratio. They're sort of cutting interest rates. They also control the state, like the states, and so they kind of like can control their funding.
So how do we play it? We just buy Chinese stocks? Buy some Alibaba?
Well, don't short iron ore.
Don't short iron ore. Okay. I'll take that off today's to-do list. Milk, bread, short iron ore. Here it is.
Yeah. Well, no, iron ore prices also soared in the week, and it looks like they got caught in a short squeeze because everyone was expecting the Chinese economy to keep slowing through the year, which means less iron ore demand. So a lot of iron ore shorts in the market. And then with the stimulus measures, there was a bit of a pickup in iron ore prices, which then triggered a short squeeze. So you got a big jump in iron ore prices.
This has got Great Wall Street bets written all over it. There's short squeezes. There's ludicrous stock buying. There's buying overvalued stocks.
And then on the iron ore price, Aussie miners are up like 10%.
There you go.
Yeah. So, but then everyone rotated out of banks into miners. This is the other chart I've got. So you got a big tick up in miners, the resources index on the ASX, and then a big fall in the financials index.
Right.
Yeah, but I mean that's just the last week. Through the year, the banks have been crushing the resources sector.
Yeah, right.
Like, huge differential. Resources still with that, they were down 20%, they're now down 10% on the year. Financials were up 30%, they're now up 20%. So, a bit of a correction, but still banks all the way this year.
Banks. You take that to the bank, Thomas. Not financial advice. All right, Thomas, finally on the show, US election coming up, and you got some data here on threats made against local election officials. Seems to be on the rise. What's going on?
Yeah, so the Brennan Centre for Justice surveyed local election officials.
Who are they? Are they the people that run the polling booths and stuff? Is that who we're talking about?
I think, I don't know for sure. I mean, there's that whole system where each local area's got to, I don't know what the area's called, but got to certify the results, and then that gets funneled up. And, there was a big thing around Georgia last election and whether they could trust those results. So I think it's like the boards that run the elections in each local area, because it's quite decentralized, the US system, relative to the Australian one, I think.
Yep.
And so you have local election officials running each local area.
Right.
Yeah, but it has been very politicized lately. And now, so the Brennan Centre for Justice surveyed LEOs, local election officials, asked them how many had received threats and where they'd came from. So 61% had received a threat over the phone, 61 in person, 38 through email, 31 through social media, 26 through the mail, and 7 other. So it's almost 2/3 of LEOs are copying threats of some kind.
Yeah, right. I think the thing that stands out to me about this chart, so we said we've got data for over the phone, in person, through email, through social media, through the post, and other. And it got me wondering, how does one make a threat if it's not over the phone, it's not in person, it's not through email, it's not through social media, and it's not through the mail? Like, is it a carrier pigeon threat? Is it, I don't know, maybe just a proxy threat? Like, just call your partner and be like, hey, honey, it's me. Look, I can't get to the local election office today, but I'm really pissed. Any chance you could call past on the way home and just dish it up? Make some idle threats against our officials.
That's not insubstantial either. 7.
7% of threats were other.
Yeah, other. Skywriting, maybe.
I guess notes on car windows would be the maybe the obvious. But then that's kind of through the mail.
Yeah. Rock through the window. That's a classic intimidation strategy. Burning cross on the front lawn. That's pretty American.
A bag of poo on fire on the front doorstep is classic.
Yeah.
Well, that doesn't really. Look, we're speculating here.
Speculating. Yeah. But I think this is a pretty scary statistic, and it talks to the way that this, it's like you imagine the AEC, the Australian Electoral Commission, the people doing volunteering on the booth, copying threats because, like, it's pretty...
The guy cooking the sausage sizzle.
Yeah. That's right.
Mate, these onions are burnt. I've seen an increase. This is anecdotal data. Definitely an increase in signage for like supermarket workers, nurses, doctors. Like, basically, don't abuse us because we're just here trying to do a job and we're here trying to look after you. We don't need you kind of abusing us for just doing our job. Our job's hard enough as it is, which totally 100% agree with. So maybe it's just a rise. I wonder if we could correlate this with a rise in general threats, like across the board, because there's definitely more of that now. And I don't know if that's just people trying to get ahead of it and sort of say, look, this is not acceptable, because we just need to tell people nowadays this is not acceptable.
I mean, I do love that there's a sign. I was in the council the other day and they had a sign, and I was like, what does the sign do? Someone starts abusing it, like, sorry, there's a sign
just
there.
Just next to quiet, please. You turn off mobile phones in the waiting room. Don't abuse the staff. I wonder if this is all part of that, because it does seem like just like taking your anger and frustration out on the people that are trying to help you, and in this case, it's the election officials rather than the politicians.
Yeah, but but LEOs aren't customer facing, right? Like, this is like the board running things in the background. It's not like it's it's not like they have a counter desk where you go and discuss the election with them. Like, you need to, like, find them and find their phone number and give them a call. You're not going to meet them in any
over the
context.
phone's the biggest percentage. So they're obviously just looking them up and going, yo, hate you.
Or in person.
Yeah, that's not great.
Yeah, so I think this is the politicization of the election and undermining the validity of election results. And I think this is new with Trump. Like, I don't think, there were sort of concerns and questions. I remember when, George Bush first got elected and the results around Florida, and there were sort of questions there. But this whole scale, unbased, casting doubt on the results. And once you do that, and then you undermine the faith in the election process, like, you can't undo it. Like, no, I don't think anyone's going to trust it again. And then I think, like, for a democracy like America, how does it function when people just refuse to believe the results? Yeah,
well, I just started with the whole fake news thing, didn't it? So news would come out and then it would just be called fake news, and then someone had to, like, prove that it happened. Yeah, it's... smoke and mirrors and lies and webs of lies. But I think the key takeaway here is don't abuse people. Don't threaten anyone. It's not nice. Stop doing it. I don't think any of our listeners would do it. I think they're smarter than that.
And also, just stop the emails. Thanks, Malcolm. We've had enough.
But I am finding the flaming bags of poo quite hilarious. So keep those coming. I love seeing the smiles on the children's faces. All right, that does us for this week. Thank you so much for tuning in. You can, of course, find all the charts from this week's show at CBE Podcast if you haven't been following along already on Instagram and Facebook, or equitymates.com/CBE. But that's all from us for this week. We look forward to talking to you again next week. Until then, it is bye for now.
Comedian V Economist is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Comedian V Economist are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Comedian V Economist acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander people today.